The cryptocurrency market is experiencing significant shifts today, with Bitcoin facing pressure and Ethereum's technical warnings raising eyebrows. Additionally, new regulatory proposals could reshape the landscape. Here are today's top 10 stories you need to know. Today, discussions surrounding the Bitcoin halving cycle have resurfaced, igniting debates among traders and analysts. Historically, Bitcoin's halving events have led to substantial price rallies, but recent market conditions are raising questions about the reliability of this model. As traders analyze past price movements, they are considering whether the traditional halving narrative still holds weight in the current economic landscape. Some analysts argue that new market dynamics, such as increased institutional involvement and regulatory scrutiny, may alter the halving's impact. In contrast, others maintain that historical patterns will inevitably repeat, leading to renewed interest and investment. As the next halving approaches, the market is watching closely. The ongoing debate emphasizes the need for a deeper understanding of Bitcoin's market cycles. Investors are advised to stay informed and consider both historical data and emerging trends as they navigate this evolving environment. In a significant move, the U.S. Treasury has sanctioned crypto wallets associated with the Sinaloa cartel's fentanyl trafficking operations. This decision underscores the government's commitment to monitoring cryptocurrency usage in criminal activities. The sanctions serve as a reminder that regulatory scrutiny in the crypto space is intensifying. As a result, the industry must prioritize compliance and transparency to maintain trust among users and investors. The enforcement of these sanctions highlights the importance of robust compliance infrastructure, which is becoming increasingly mandatory in the evolving landscape of digital assets. While this development may negatively impact the perception of cryptocurrencies, it could also benefit firms that provide compliance solutions. Institutions are likely to demand enhanced controls and transparency as regulatory enforcement becomes a standard expectation. Moving forward, the crypto community must adapt to the growing emphasis on compliance and regulatory adherence. A new legislative proposal, the PARITY Act, has been introduced in the U.S. Congress, aiming to provide tax relief for small crypto transactions, stablecoins, and staking activities. This initiative could significantly impact the everyday usage of cryptocurrencies, as tax barriers have been a long-standing concern for users. By simplifying tax treatment for minor transactions, the PARITY Act could encourage broader adoption of cryptocurrencies for daily purchases. The proposal could also enhance the user experience for stablecoins and staking, making these options more appealing for investors. If passed, this legislation could mark a turning point for the crypto industry, moving it closer to mainstream adoption. However, the market will be watching closely to see if this proposal translates into actual legislation or remains a symbolic gesture. The potential for improved tax treatment could usher in a new era of everyday crypto usage, leading investors to monitor the progress of this act closely. The recently proposed Clarity Act is generating buzz within the cryptocurrency community for its potential implications on asset classification. This legislation aims to provide clearer guidelines on whether digital assets should be classified as securities or commodities. The ambiguity surrounding asset classification has been a significant hurdle for the industry, affecting everything from exchange listings to regulatory compliance. If passed, the Clarity Act could offer much-needed legal certainty, paving the way for enhanced institutional adoption and innovation in the sector. However, clearer regulations can have dual effects. While they may foster growth, they could also impose additional obligations on token issuers and DeFi protocols. As lawmakers debate the details, stakeholders are eager to see how this act could influence Ethereum and other leading cryptocurrencies. The potential for improved regulatory clarity could stimulate investment and innovation, but the market must remain vigilant about the balance between regulation and innovation. XRP is currently one of the most polarizing assets in the cryptocurrency market, drawing significant media attention while experiencing lackluster price action. This dissonance stems from ongoing discussions about its institutional use and evolving regulatory landscape, particularly as Ripple Labs continues to navigate legal challenges with the SEC. Despite these developments, XRP's price movements do not seem to mirror the enthusiasm surrounding its potential. This disconnect raises critical questions about the asset's fundamental strength and overall market perception. Historically, XRP's performance has served as a sentiment indicator for retail investors, emphasizing the importance of monitoring its price fluctuations and trading volume. As retail interest waxes and wanes, investors are left contemplating whether XRP is being accumulated for long-term gains or merely traded for quick profits. The market's reaction to XRP offers valuable insights into broader trends in investor sentiment and risk appetite, suggesting that upcoming regulatory decisions could significantly influence its trajectory. Stakeholders are now keenly awaiting the implications of these developments. Ethereum is currently facing a critical moment as its price structure exhibits signs of weakness, prompting analysts to issue warnings of a potential decline towards the $800 mark. This situation is particularly concerning for traders, especially considering Ethereum's significant role as the leading smart contract platform in the cryptocurrency space. The current market environment, characterized by low momentum and tepid investor interest, raises fears of increased volatility for ETH if the ascending channel breaks. Ethereum's overall health is vital for the broader decentralized finance ecosystem, as it underpins liquidity and supports numerous applications. Should ETH's price continue to drop while Bitcoin maintains stability, there is a risk that capital may shift towards smaller, more speculative assets. This could lead to a market environment that is active yet lacks genuine investor confidence. As traders grapple with these dynamics, they must balance Ethereum's long-term utility against pressing short-term pressures. Looking ahead, Ethereum's performance will serve as a crucial barometer for market health and investor sentiment in the evolving cryptocurrency landscape. Bitcoin is experiencing a notable loss of momentum as it trades below key psychological levels, recently falling under $77,000 on several exchanges. This price action signifies a struggle within the market to convert macro optimisms stemming from recent positive economic data into sustained buying interest. Historically, Bitcoin's performance has been a bellwether for the overall sentiment in the cryptocurrency market, and its current weakness may lead to increased volatility among altcoins, which often follow Bitcoin's lead. The market appears to be in a consolidation phase, with spot demand present but not robust enough to absorb sell-offs effectively. Investors are now keenly looking for a macro catalyst or a significant technical breakout to reignite bullish sentiment. The current market sentiment is characterized by caution, as traders remain hesitant to commit large amounts of capital amidst ongoing uncertainties. As Bitcoin continues to navigate these challenges, its ability to regain momentum will be crucial for the overall health of the cryptocurrency market. Analysts suggest that a decisive move above $80,000 could signal a renewed bullish phase. The U.S. Treasury has recently imposed sanctions on specific cryptocurrency wallets linked to the notorious Sinaloa cartel, underscoring a vigorous commitment to enforcing compliance within the cryptocurrency sector. This decisive action not only targets illicit activities, but also marks a critical recognition of cryptocurrency's growing integration into the broader financial regulatory framework. Historically, cryptocurrencies have often been viewed as a means to circumvent traditional financial oversight, but these sanctions signal a shift toward accountability. As regulations tighten, the perception of cryptocurrencies may become more negative among the general public. Yet, this could catalyze growth for firms emphasizing compliance solutions. Financial institutions are increasingly seeking robust mechanisms to navigate this evolving regulatory landscape, ensuring they operate within legal parameters. As the cryptocurrency industry adapts, stakeholders will need to prioritize compliance and transparency, which are essential for fostering trust and stability in the market. Looking ahead, firms that proactively embrace these compliance measures are likely to gain a competitive edge, positioning themselves favorably in a rapidly changing environment where regulatory scrutiny is expected to intensify. Ethereum is currently facing a critical juncture as its price risks dropping towards $1,800 if the current ascending channel breaks. This potential decline raises alarms for traders and investors who rely on Ethereum's stability as a crucial component of the decentralized finance ecosystem. The price weakness comes amid a broader market environment characterized by heightened volatility and diminishing momentum. Recent macroeconomic factors, including inflation concerns and regulatory scrutiny, have contributed to this uncertain landscape. Ethereum's role as the leading smart contract platform means that any significant price movement could have far-reaching implications for the entire cryptocurrency market. If Ethereum continues to underperform while Bitcoin holds steady, capital may flow towards smaller, speculative assets, resulting in a fragmented market. This could further exacerbate price declines for Ethereum, impacting projects built on its platform. Traders are now analyzing key support levels and market sentiment, weighing the long-term benefits of Ethereum's robust network utility against the pressures of short-term price action. The next few days will be crucial for Ethereum as traders look for signs of recovery or further decline, with many anticipating that a decisive move could set the tone for the broader cryptocurrency market in the coming weeks. Bitcoin is currently struggling to maintain its footing as it trades below significant psychological levels, recently dipping under $77,000 on various exchanges. This price movement is more than just a statistical anomaly. It reflects a broader narrative of uncertainty within the cryptocurrency market. After reaching an all-time high earlier in the year, many investors anticipated a sustained rally. However, the current market appears to be in a cautious phase, where optimism is not translating into strong buying pressure. Factors such as regulatory scrutiny and macroeconomic concerns are contributing to this hesitance. Without aggressive demand from buyers, Bitcoin's decline can lead to increased volatility among altcoins, which often react more dramatically to Bitcoin's movements. This interconnectedness means that a bearish trend in Bitcoin can trigger sell-offs in smaller cryptocurrencies, impacting the broader market. Investors are now looking for a macro catalyst or a narrative shift, such as a strong ETF approval or a decisive technical breakout, to rejuvenate bullish sentiment. The current market environment suggests that traders are adopting a wait-and-see approach, reinforcing the need for a clear signal to re-enter the market with confidence. As Bitcoin navigates these challenges, its ability to regain momentum will be critical for the overall health of the cryptocurrency landscape. Analysts believe that breaking above the $80,000 mark could reignite interest and restore confidence among investors. Thank you for tuning in. Which story surprised you the most today? Let us know in the comments, and don't forget to like and subscribe for more updates.